Okay. Welcome back to Public Finance at 5. This video, we want to look at the question paper of December 2024, and we are going to look at question 4 on that question paper. However, our first question is just privatization. So basically, privatization is described as the transfer of ownership from the government to the private sector. So in this case, the government stops to be the owner of the business, and we can also try to describe it as the process in which a publicly traded company is taken over by a few people. So that is the description that we have in terms of privatization. But our question requires us to come up with four methods, and each of that we have is denationalization, which we can try to describe as the act of removing denationalization. We can try to describe it as taking the industry away from the government. That is denationalization. Then moving on, we also have another method that we have there, which we are separating important services from party politics. We can also try to describe it as the act of removing political connections from something, or the process of making something to have no political connections. That is deregulation. So basically, deregulation, we are removing the regulations that are there, way legal obstacles, regulations or laws, so that industries have no protection against competition from others. So basically, this deregulation is being explained from the point of view of trying to remove protection against competition. So basically, this one that in terms of deregulation. So on the last method, we have got a franchise. And basically, we know that franchise is an arrangement where one party, which is the franchisor, grants another party, which is the franchisee, the right to operate under the franchisor's example. The brand, it can be a business model or a system. And this will be done in exchange for fees and royalties. So that is a detailed explanation that we have in terms of the franchise. Then here we've got a brief rating of usage of, obviously, use of the four methods that we have. So it's LASSAIZE-FAIRE system, and we are going to see that these are the goals that we have of LASSAIZE-FAIRE system, of enforcement of contracts by law courts, defense, and of private property. LASSAIZE-FAIRE system. So basically, we are seeing that the LASSAIZE-FAIRE system is there to foster a free and competitive market, and obviously promote individual liberty and encourage economic growth through minimum government intervention. That is what is the motive of the LASSAIZE-FAIRE system. So moving on to the next question that we have, which is going to be our 4 points. Before funds can be 5 conditions applicable before funds can be withdrawn from the National Reserve Fund. So we see that the National Reserve Fund is designed to hold assets and manage investments. Conditions applicable before funds can be withdrawn from the National Reserve Fund. So we can try to be an appropriation act of government when provided for in the in the Constitution, and then as a direct charge against the National Reserve Fund. So these are the conditions that we have. So in this case, funds can be withdrawn from the National Reserve Fund when it's provided for in its constitution. That is, when it appears in the constitution, then we have such a scenario whereby the funds can be withdrawn from the National Reserve Fund. So this is what we have on 4.3. And then moving to 4.4, it is the name two decision-making systems that exist, allowing decisions to be made collectively. Our question is for 4 marks. Obviously, each decision-making system with 2 marks. So the decision-making system that we've got a consensus decision-making and the majority decision-making. So you see that under the consensus decision-making, it is a group process where participants work together to reach an agreement that everyone can support, even if they don't fully agree with every aspect of it. So that is the consensus decision making. Then we also have the majority decision making, whereby we are saying decisions are based on support of the majority of those involved, often done through voting, with the outcome reflecting the preference of more than half of the participants. So that is the majority decision making. So basically, these are the two that we have. In this case, according to the question, we just have to state them. We're moving on to the next question, which is 4.5. To discuss two criteria used to determine the financial needs of the community or government. So obviously, we have got to see that out of the two criteria, we have 3 marks of each. So moving on to our answer section, you'll see that we've got the ideal criterion, and then we've got the average criterion, whereby for the ideal criterion, we're saying it describes the minimum level of service, the desirable minimum level of service are determined, as well as the costs to supply such a service minimum. So that is ideal criterion. Then you move on to our average criterion. It's according to which the financial need is measured in terms of rendering an average standard of service. That is now the average criterion. So moving on to the next question, which is for 6, explain what the following technologies mean in the public finance. We've got fiscal control, but on fiscal control, this is just a process designed to provide reasonable assurance regarding the achievement of objectives in ways like producing financial information. So you see that fiscal control is under the fiscal policy, whereby we have got two main instruments that are being implemented, whereby we have got taxation and the government expenditure. So the explanation is within those two instruments, that is taxation and government expenditure. So moving on to fiscal control, we'd see that control is exercised through taxation and not through the banking systems. Then second point, changes in the spending of the central government and its taxation policy. So changing in the spending of the central government is now described the government expenditure. And then it also includes its taxation policy. Then moving on to the second part, we have monetary control. Monetary control now, remember, is a control which is under the central bank of the country, whereby they focus on two main instruments again, whereby they adjust the interest rates as the cost of borrowing, and also the money supply, money that is injected in the circular flow. So the explanation that we have in terms of monetary control is that is to control the money, the supply of money, and then control interest rates, control exchange rates also, and control international balance of payment, and control inflation rates. So this becomes the last part that we have according to our question 4 of December 2024. So let's stay tuned for more typical examination questions that will be uploaded on this channel. So let's subscribe and share to our channel. And please, let's stay tuned. We'll meet again in the next video.